Sure.
Let me know if you can share your screen.
Yeah, I will. Hey guys, how's it going? Hey, this is Chad from Tidal Finance. We started this project earlier this year since March. So what we're doing is insurance cover space. So I'm pretty sure like a lot of you already well know about Nexus Mutual. So we are kind of in the similar space, trying to solve the problem in a different way. Yeah, so without further ado, let me bring on the deck and walk you guys through. All right, you guys can see a deck, right?
Yep.
Awesome. So Tidal Finance. So we are first balancer like customizable insurance marketplace. But seeing balancer like here, we're really kind of borrowing that mechanism. Like we have a different pools with different risk factors and bundling this protocol together. And when the LP come on here, they can select their capital to be exposure to different pools, and then directly interact with the cover purchaser and the buyers in different pool. A little bit of background in the DeFi space, the total locked value just passed over $14 billion, I think just last week. And when you look at Nexus Mutual right now, they are the main like cover provider. The total cover sold is about 60 million. So you can see it's this place is just pretty empty for product solutions to come in. Along us, there's a few other different projects. I do see this is a really good space for to benefit the whole DeFi space. Some problem space, the smart contract are risky, and there's also a pretty high demand for especially new protocols, right, to get covers. And in general, there's like a limited cover insurance provided on the market. In my opinion, it's the design here, like in the existing products in the market, and now really incentivize the LPs to really put their capital in use. So the incentive is pretty low for them to sell the covers. And when you look on the buyer side as well, on Nexus Mutual, there's the low insurance pricing. There's a pretty mature projects will have like below 5% and 2 or 3% APR. But on fairly new protocols, the cover pricing is all like about 10 or even go up to 50% APR. So to me, this is not really a sustainable solution. So on Tidal, we focus on 3 key differentiators. First is permissionless pool creation. So anyone can come to the platform, they can decide which kind of pool they want to participate in. And second is customizable strategy. So they can pick like which protocol they want to sell cover to, have a different risk exposure, have a higher leverage on the protocol, on the capital they put in. And of course, with the different leverage, like the pricing, that will impact the protocol coverage pricing, and also the return on their capital. And we also incentivize auditors and market makers. So auditors will just in general increase all the accountability of different protocols, which also help us on during the underwriting risk quantification process. And the market makers will provide some liquidity capital into different pools. So the key mechanism right behind this is really how we can diversify the risks. So I like to give this example. It's called fractional reserve concept in the traditional insurance space. So the example I normally give is, for example, if you are selling insurance, if you have $1 as your capital, if you only sold this $1 to one person, and how much he pays you normally like a small percentage insurance premium, it's how much you earn. But at the same time, you're putting, your capital 100% at risk. What if there's really payout, right? So this set of equation will never work in the traditional insurance space. So what you want to sell is, you can sell to 20 people, you want to sell to 50 people to leverage up your capital utilization. At the same time, you are managing the risk of, this 20 people or 50 people going under at the same time. It's under the cover period is low, right? So that's through this leverage, it's really like a win-win situation. So On the buyer side, you can offer lower insurance premium, and on the seller side, you can generate more returns for your capital who's selling insurance. So that's where this is like pooling ideas comes in. Like we're really trying to simplify this mechanism for the LPs to get exposure to quickly sell like more insurance, and also for the buyer side to enjoy like a low insurance premium. Here's a simple flow chart, how it works. Like we have, initially we're gonna launch a few like different risk level pools, and the pool creator can propose like different protocol, new protocol into different risk level as well. You know, we go, every time there's a proposal, we'll go through a risk assessment process. So mainly to determine two factors. One is how risky is one single protocol. We have a metrics to evaluate that. And also the second is what's the correlation with that, you know, category. So what it means is, you know, we're trying to keep a different protocol as independent as possible when LP selecting their exposure. Like for example, this bundle exposure, you know, with Compound, Uniswap, Balancer, we can readily think, you know, they're pretty independent. If Compound has some problem, Uniswap, Balancer will be relatively safe. But you know, in some other protocols, there may be a correlation with it. So after this process, you know, when LPs come on here, they can quickly, you know, toggle on and off, like which they want to get exposure to. We'll have an estimate on their return on the capital. They can sell the insurance, earn returns. And when they stake the capital, the insurance tokens will be generated to cover the assets, you know, exposure contracts. And then the insurance tokens can be traded with insurance buyers. So the insurance tokenized design, you can just think of it's kind of like a, you know, easy way to facilitating buy and sell of insurance contracts. And when the cover period ends, you know, if there's no claim that, you know, everyone's happy, LP got earning their premiums, got their capital back. But if it's a claim, we have a DAO voting process. So it's a two-layer voting. The first layer, like who stakes in the Tidal token into the risk assessment process, will vote, have a result, and we will validate it with the protocol team and auditors. And if there's a misagreement, we'll, you know, escalate the vote to a next level with all the people as Tidal token holders. So that's a claim process. So here's a quick comparison with Nexus Mutual. So like I mentioned a few times, the goal of this design is really to increase the return on the LP who's selling insurance covers and lower the insurance premium. To further elaborate on this number, so for example, like if one LP has their exposure to 20 different protocols at a leverage, and if each of them can sold like insurance cover price at 5% APR, and 20 of them will have like 100% return earning on the premium, right? But of course, you know, there's also higher risk. What if there's a multiple hacks, and sometimes they may suffer partial losses, and you know, the cover buyer side may suffer some partial coverage as well. But the key, in my opinion, this is the only way for this insurance space to work. And I'm pretty bullish on this number to go even higher and higher, because with more money coming into the DeFi and more protocols like lending or DAX, there will be over time mature. And you know, the more of these protocols have, there will be more diversified of the different digital assets on this protocol. That's when, you know, the higher leverage can be played into different risk pools. And because of, you know, we're expecting the new smart contract covers will be available faster with, you know, lower insurance premium we can offer. No KYC required, and also customizable terms, meaning, you know, LP can select which exposure they want to be exposed. For the long run, we pick Polkadot because our team is very bullish in that ecosystem. So think, you know, that's where when more blockchains we're connected to would have a bigger addressable market. Also faster, higher security, better governance, and also lower transaction fees. Also, the Tidal token, right? It has a utility function and also governance function. So utility feature, it earns the fees and profits generated from the Tidal platform. So our business model is to charge like a small percentage on the premium on the cover transaction. And also governance is voting for the payout assessment process, voting for new proposals. And also here we have additional staking mechanism is to stake the Tidal token into additional backup pool. So we're gonna use this pool like kind of like a backup emergency fund. So when other, too many claims may happen in different pools, and if there's a short-term insolvency issue, that we may carefully allocate some fund from the backup fund to help out. Here's an estimate roadmap. So we are shooting for the testnet launch by the end of the month. So far we are doing also token sale as well. So if any investment interest, please let me know. Early next year, we planning on go live on Ethereum first. And that's one about the time, like when Ethereum bridge become live, we're thinking about migrating. I've been talking to Plasm and Moonbeam, both platforms to figure out the next step and onboard more protocol assets. And over time, we are planning maturing on the DAO controlled risk assessment process and payout process. And also with there's more fund will be accumulated in the treasury fund as well, that we are thinking to make like other investments using that cumulative fund. And to the future that, in the Polkadot ecosystem that we want to take that first mover advantage to get into that ecosystem. So here's a team. We have a pretty strong team. Myself, I have a finance and mathematics background. I came to crypto in 2017 and worked in the VC firm for a couple of years. So a part of personal story, like I fully committed on this project since the beginning of this year. Like myself, it's LP on different protocols as well. And back then, trying to find covers and with this higher risk protocols, it's kind of like a pain point. And myself use Nexus Mutual too. I studied them a lot. I mean, it's very clever, smart design. But also at the same time, I think there's some things, different system can be designed and things can be improved. Dan is our CTO. So very rich experience in finance, trading, and technology. So in his career, he built several exchanges platforms, and on Tidal, we have this kind of open marketplace, like trading sort of design with insurance cover tokens. So he's really helpful on that. Valeria, bought us a lot of help in the parity strategic initiatives, and so she's in the Polkadot ecosystem, and also some help from Consensus. So we're trying to work out with the partners on quantifying like different metrics on the risk assessment of different protocols. Nathan has a computer science finance background, been working with Dan on architecting and design, and Kevin really resourceful on the PR side, and Anish help us on the product strategy, and so also some front end design. So the team total have about, right now 10 people. There's 3 more people which is on board on the product side, and we're developing at a pretty steady pace. On top of this, we have an advisory board from traditional insurance space, like Marsh, and a couple of consulting groups like PwC and Deloitte. So here comes the summary. We are first balancer like customizable insurance marketplace. And through this design, we want to bring consumer really a low insurance premium, a high returns for the LP, and also faster insurance product cover launch to the market. And since it's a marketplace product, and we do want to launch as soon as possible, and especially in the Polkadot ecosystem, we want to take that first mover advantage. Yep, that summarizes the pitch.
Great
Awesome.
stuff. Thanks, Chad.
Thank you. You want to go to the YouTube channel for some questions? It looks like there was a bunch in there, David.
Yeah, that
Yeah,
was
sure.
quite a few.
Awesome.
Are you ready for some questions, Chad?
Yeah. Do I need to go on there to pick, or I haven't got on the YouTube?
No, that's
yet.
okay. I can read them out to you, and you can just.
Okay, sure.
Nah. Yeah, maybe stop sharing your screen real quick, and we'll go to full cam. And I'll look on Twitter, see if there's anything on there.
So first question up then. Sid's asking, how are you planning to manage gas fees? And maybe how's your platform different from other DeFi protocols?
Oh, the gas fee, that's a good question. Yeah, we're exploring like layer 2 solutions. And there's also other detailed design, like we may temporarily hold a bigger amount of fund, and just, in there, we're trying to not making the transaction like on every transaction, and we kind of build like on a period of time. So.
Okay, and yeah, so how would you say you differentiate from other DeFi platforms out there right now?
You mean the different insurance players?
Yeah, I mean, I don't think we should generalize you as everything, but yeah, in terms of who would you say is your kind of competitors out there? What do you think you're
Right.
doing or bringing to the market slightly different to those? Yeah.
Yeah, I mean, like Nexus Mutual is one of the top one, right? So I think like each system right now have their own design, the mechanism. It just like what I'm trying to achieve is a better utilization on the capital who providing insurance covers, and also lower the insurance premium, right? So that's something I'm trying to achieve. Because when you look at Nexus Mutual, so their capital, total pool, the capital right now is close to 100 million. Their cover sold is 50 million, right? So in other sense, there's a lot of capital in their big pool is not being utilized.
Gotcha. So more around trying to just really more value from the capital that you've got under in the platform and keep the fees low. Right. Okay. Yeah, so obviously there's a lot of questions around gas fees. So that's obviously a topic of interest for people. You come from a pretty traditional, very structured background. So, how do you feel that you can kind of engage with the kind of more crypto community? Because I guess maybe they might look at you as being quite, maybe a very mature type of project, but nonetheless, there's surely lots of value for the average investor as well. So what would you say to those kind of community type, people out there thinking about how do I get involved in Tidal's ecosystem?
Well, we are actively building up our community, right? So yeah, so I mean, in terms of we starting doing more fundraising is merely just a few weeks ago, and everything is in plan. We are also with other protocol teams, right? Like right now, we are reaching out very actively because this whole insurance space, like functioning as a platform, I think the auditors and their own protocol teams has a skin in the game as well, right? So we actually have a very clear strategy that each protocol team should have a guarantor fund to back up their own protocol, as well to attract other LP to come in later, to participate, setting their own covers. So that's a part of design as well. So in terms of the community, getting DeFi community, yes, we are actively working on that.
All right, good stuff. Good stuff. I've got a bunch more questions here, Matt. I don't know if you've got anything on Twitter that you can ask Chad, or whether I just keep going.
Yeah, no, just keep going with the question set that you have.
Okay, great. So just a quick question here. What's traction of the beta net in terms of product development? Where are you at in your kind of roadmap, and what's the next kind of biggest developments that you have you're working on right now?
Right now we're prototyping and planning on the testnet ready later this month, by the end of the month or early next month. So yeah, in terms of prototyping, right? Like we actually spent quite a bit of time because, like I mentioned, this risk quantification, insurance pricing premium, it's a kind of like an unknown area. So we need a lot of creative design, and compared to other products on the market as well, right? Like it's like they all kind of design their own system, but I think at the end, who's the winner is like whose system is more robust and bring more value, right?
Yeah, no, good. And so what was have you got the full roadmap out now in terms of when mainnet goes live and things like that, or are you still working on that?
Yeah, I'm still working on that.
Okay. Any idea when that might be ready? Just to put a bit of pressure
right now, shooting for the mainnet will be in February timeframe.
Oh, so pretty soon. So that's something exciting for people to look forward to. No pressure because we know things do change, but nonetheless, we're not far away from that now. Okay, so are the insurance tokens tradable right now? Is that something that
we're planning to? Yeah, we plan to do that part maybe not at the first release. Yeah, so but that's definitely in the roadmap. Yeah.
All right, good stuff.
I do have some Twitter stuff coming in, David.
Yeah, over to you, Matt. Let's go to Twitter and Matt.
Yeah, I'm not sure if this was asked already, but how do you plan to sustain 3-digit APR with increasing demand? So I guess maybe talk about the APR demand. How do you plan to sustain it? Which I do think is an issue with a lot of yield.
Yeah, I mean, I think he's talking about the yield, like on farming, right? Like with our token incentives at the beginning, a lot of projects will shoot up quite a bit and then come down. But actually on the presentation sheet, what I'm proposing is actually that's how much you earn. If assume the cover space, insurance cover space become more liquid, more demand on that side. So and our APR design, in my opinion, is over 100% by earning the insurance premium. So that's a fair design because there's also a risk factor to it, right? Because you're not like deploying your capital as risk-free. So the return should be a lot higher than you're depositing in a bank, making like 10% or 20% right now on the other investment funds. So
gotcha.
There's definitely a higher risk to it too.
Yeah.
And where can people access your tokens right now, Chad? For anyone that's not aware.
We are doing the private raising now. So the public raise, the announcement will be coming out pretty fairly soon.
Okay.
Have you had any? This is kind of from Twitter, but I'm going to rephrase the question. Have you had any integration partners come in during the beta testing of product that you've been testing for insurance to date on the testnet?
No, not yet.
Not yet. Well, what stage of development are you in, I guess? Let's go there.
Oh, we are prototyping right now, and testnet will be we planning on ready by end of this month or the next month. Yeah.
Do you have any plans to bring in some big integration partners at that time to test them out?
Yes. The integration partners, like we actively, partnering with protocol teams to come in to test. So different protocol teams who can, like their protocol will be listed on our platform that we're trying to work out some partnership terms as well. Like we trying to let them put some liquidity to back up their own protocol. So.
Okay, good stuff.
Awesome.
I got a couple more, I think, just to finish this out, Chad. So has your smart contract been audited yet? Is that something that needs to be done?
Something needs to be done, yes.
Okay, perfect.
Yeah. We're picking different partners.
Are you looking at that right now, or do you have a particular audited partner? You have, okay, great. So that's in. And people are asking, can you stake your tokens right now, or will they be able to?
We have a staking mechanism to stake into additional kind of in the emergency backup pool. But initially, the liquidity mining design is also in place. Like you stake the capital, we have a token incentive to provide
gotcha.
Liquidity into the insurance pool. Yeah.
Okay, so yeah, so there's a liquidity protocol which is going to help build the liquidity to the platform, and people can earn from that. All right, that's great. That's pretty much everything from my side, Matt. I think that was really interesting. I think from our perspective, you know, there's some exciting things. This is kind of like the hybrid of bringing the traditional, more mature marketplace into the crypto industry, which is something that I guess a lot of people have been saying for some time. So, you know, I'm sure that the success will be evident for those that can kind of just get the kind of the, if you like, the hybrid of getting the professional side and the crypto side together. You know, it's quite an interesting dichotomy of the professional people coming to the space, and it never surprises me how crazy at times the crypto community, but nonetheless very, very passionate and caring about, you know, the things that really matter in there. So we wish you well with that. Matt, do you have any sort of closing remarks or anything you'd like to just sort of feed over to Chad before we let him go?
No, just thank you for coming on, Chad. If you want to stick around for the break section, we'll probably break out in the panel. But if you have other places to go, we understand.
Okay, sounds great.
Yeah.
Awesome.
So just before you go,
thank you
Chad,
guys for having me.
Yeah, just before you go, I'll do the same for you. Is there any breaking news or anything you feel you can share to the community right now?
Yeah, I mean, I'm pretty excited for the product. Like, we haven't released a lot of you know, detailed design features yet, but you know, stay tuned.
Lots to come.
There's a few different components, modules. Like, we need a lot of community participation, and over time we control the DAO as well for a lot of exciting things on the voting. So yeah, stay tuned, and hopefully we can build this product together.
Sounds great.
Awesome.
Brilliant.
Really appreciate it.
Thanks, Chad. Take care. We'll be in touch.
Thank you, guys.